Last year, Congress passed a massive tax law. And if you work in America, some of its biggest changes are hitting your taxes right now. But here's the part nobody tells you. This law doesn't simply raise your taxes, it doesn't simply lower them either. It changes who gets the benefits and who doesn't. The law is called the One Big Beautiful Bill Act, signed on July 4th, 2025. And most of its major individual changes apply to your 2026 taxes, which you'll file in 2027. So let's see what actually changed. First, the standard deduction. For 2026, it's $16,100 for single filers and $32,200 for married couples filing jointly. That's a tax break for millions of Americans. Then there's a child tax credit. The maximum credit increased to $2,200 per qualifying child. So families who qualify could get a bigger tax benefit. But now it gets interesting. If you work in a job where tips are customary, you may be able to deduct up to $25,000 of qualified tips from your taxable income. And if you work overtime, there's a new deduction too. For 2026, single filers can potentially deduct up to $12,500 of qualified overtime compensation, while married couples can deduct up to $25,000. But remember, this doesn't mean your entire overtime paycheck is tax-free. The deduction generally applies to the overtime premium. There's also a new deduction for certain car loan interest. If you bought a qualifying new vehicle with an eligible loan, you may be able to deduct up to $10,000 of qualified interest. But the vehicle has to meet specific requirements, including U.S. final assembly. And higher income taxpayers can see the benefit reduced. Now, here's one change that could actually hurt some taxpayers. Charitable donations. Starting in 2026, if you itemize your deductions, the first 0.5% of your adjusted gross income in charitable contributions isn't deductible. So if you make $100,000, 0.5% is $500. If you donate $1,000, only the amount above that floor can potentially qualify as an itemized deduction. But there's a twist. If you don't itemize, you can now claim a charitable deduction of up to $1,000 for qualifying cash donations. For married couples, that's up to $2,000. Then there's SALT. The state and local tax deduction limit increased from $10,000 to $40,000 for 2025 through 2029. That could be a major benefit if you live in a high tax state, but higher income taxpayers face a phase out. So who actually wins? Tipped workers could benefit. People working overtime could benefit. Families with children could benefit. Some car buyers could benefit. And people in high tax states could benefit. But some taxpayers who rely heavily on itemized deduction could lose part of their tax benefits. And here's the biggest mistake you can make: waiting until April 2027 to think about this. The IRS has already updated its tax withholding estimator for the new rules, so you can check your situation now and potentially adjust your withholding before the year ends. Because the One Big Beautiful Bill isn't simply a tax increase, it's a complete reshuffling of the rules. Some people will pay less, some will benefit from new deductions, and some will lose deductions they used to have. The question is, which one are you? Subscribe for more simple breakdowns of the American financial system.